Hi, I'm Daniel Cooper from PCE, and today we'll be covering the groups of people who rely on an ESOP update valuation and why they need it. First of all, we'll give a general overview of the ESOP and its valuation obligations. After the ESOP is formed, there is a need for it to be valued once a year, and the trustee has to state the stock price in order for the ESOP to remain compliant with its reporting obligations. The first user of your ESOP valuation share price will be the Certified Public Accountant, the CPA. Why does the CPA need that value? Well, under the relevant reporting standard, which is called ASC 718, it is necessary for the CPA to determine the amount of compensation expense that is being awarded and received by the employees through the ESOP. Once they have the stock price and the number of shares that are going to be released to a participant in a year, they can calculate how much benefit and expense needs to be recorded in the profit and loss statement. The second party who relies on your ESOP valuation is called the third party administrator, or the TPA. And they are responsible for a number of forms that ultimately go to the IRS, the most important of which is the Form 5500. So once the TPA has the stock price from the trustee, they can determine a number of things, including the value of the shares that the ESOP holds at the end of the year, the value of the shares released to participants in the year, and also information relating to dividends and other attributes of the ESOP. So the TPA is responsible for a number of forms, and it cannot really do its work until it has the stock price. The third group of people who are relying on the stock price and need it are the participants who are going to continue to work for a number of years. These regular participants, why do they need the stock price and how does it impact them? Well, the participants every year receive a statement of their ESOP benefits and an ESOP account statement. And one of the key inputs and key numbers in that ESOP account statement is what each share is worth. So for instance, if Joe has 100 shares and each share is worth $10 based on the latest valuation, then Joe's account statement shows he has an account balance of $1,000. So for the participants, it's very important that the value is determined in a timely way and they know what it is. The fourth and final group of people who rely on the ESOP stock price determined annually are the retiring participants. So these are participants who are about to cash out their ESOP balance, and therefore it's very important that they know how much that stock is worth. Let's take a participant, Fred, who has over time built up an account with 10,000 shares in it. If each of those shares is worth $10, then Fred's account has an account balance value of $100,000, and he may be entitled to receive as a lump sum when he retires. Therefore, very important that retiring participants know how much the stock is worth. So today we've covered 4 types of parties who rely on the annual ESOP valuation. Certified Public Accountant, who needs to know how much to report through the profit and loss statement for the ESOP benefit. The third party administrator, who relies on the stock price to fill out forms for the IRS. The regular participants, who are curious how much their ESOP shares are worth at the end of each year. And then perhaps most importantly, the retiring participants, who need that number to drive how much they will get as a payout once they retire and leave the company. If you are one of the 4 groups of people who relies on the annual ESOP valuation and that valuation is not being performed as quickly as you would like, then you can reach out to your ESOP trustee and recommend a new valuation firm such as PCE. At PCE, we perform dozens of annual ESOP valuations, and we are experienced at helping multiple trustees, and we would be happy to help your ESOP. Thanks for watching this video. Be sure to subscribe to our stream and make sure you hit the thumbs up button to show you've liked the video.